We are already past yesterday's FOMC meeting, and indeed the cryptocurrency market reacted positively. I have gathered all the important information for you based on the last 24 hours. We are planning and strategizing for the upcoming days. Let's see what could potentially happen in the crypto market and why. Bitcoin surpassed $87,000, and Ethereum returned to almost 2,100. And is this the end of the declines? Let's check that as well. Many of you are exhausted, right? Ethereum hovered around $1,900 for a week. Bitcoin was in a mega consolidation for a week. It practically didn't move, so the market hasn't been spoiling us in recent days. So let's see if such a small piece of information can trigger a trend reversal and the return of a bull market in cryptocurrencies. I won't bore you today. The video will be concise, so leave a thumbs up and subscribe to the channel. And definitely after this material, check out the next two that I recently published about how to play the market when you're in the red. You have it on your screen now. And generally, a longer, more comprehensive market update with the current state of affairs. Both videos are still relevant, so I recommend catching up. And let's continue with the material. So yes, look, we are after the FOMC meeting. At it, the American Central Bank, as expected, made a pause. This was long-awaited and announced. No one really expected a different scenario. Interest rates were maintained at the same level. But you know, despite the fact that nothing significant happened here, positively, especially, right, that the market did not make any further interest rate cuts. However, cryptocurrencies and stocks simply rose yesterday. So, a few key questions arise. Did such a small thing, did Jerome Powell, with what he did, save the rally yesterday? Is this the rebound that everyone has been eagerly waiting for weeks after the struggles we've been through? What are the Fed's plans for the coming months and years? And how does this correlate with the cryptocurrency market? Because you need to know well, just be aware that it plays a huge, crucial role in how the cryptocurrency market looks and in which direction it is developing. We will also see whether the mass printing of this money and increasing liquidity are just around the corner, or if we will have to wait a bit longer for them, which would also delay the growth in crypto, allowing you to better tailor your strategy for playing this market in the coming weeks and months. So today we will also analyze the situation in the cryptocurrency market in general. So first and foremost, that meeting is already behind us, right? It took place a few dozen hours ago, and the Federal Reserve made a decision regarding monetary policy. And there was no surprise. The rates remain unchanged in the range of 4.25 to 4.5 percentage points. And you know, the market has been pricing in such a scenario for a long time. It was already factored in. It wasn't at all a play on the sudden drop of these interest rates, that they would be lowered. No, people simply assumed that at least there would be this pause. And indeed, that's what happened. So the market just took on a comfortable tone. Everyone concluded that okay, it's as it was supposed to be, at least nothing went wrong now. Finally, we can say that things are as they should be. Of course, as usual, what the chairman, Powell, has to say also mattered, and how the Fed's predictions look for the coming months and years. The most important issue is the slowdown of the QT process, or quantitative tightening, which I have mentioned to you many times on this channel, because at this moment the Fed is selling $60 billion monthly in MBS, which are mortgage-backed securities, and also in Treasury securities. And that's that. The Federal Reserve announced in an official document that starting April 1st, QT will slow down from $60 billion to $40 billion. And on X or Twitter, many people misinterpret this event, I believe, because people, claim that from April, the Fed will only be selling $5 billion a month. And here, what is worth emphasizing is that they actually reduced the reduction from $25 billion to $5 billion monthly. But here we are talking exclusively about Treasury securities. However, when it comes to mortgage-backed securities, their monthly reduction remains the same at $35 billion. That's why I'm clarifying everything for you and showing you how it looks. I remind you very eagerly and warmly to subscribe to this channel and give a thumbs up on this video. It motivates me to keep working. They are what they are. Some people have definitely left the cryptocurrency channels, but I congratulate those of you who are persistent and still here. I think the market will reward you, and you won't be disappointed for staying on board. So, subscribe, comment, and like my content. Thanks a lot. Powell said that they are adopting a long-term strategy of transitioning from tightening to quantitative easing. He even compared it to a smooth airplane landing. No turbulence, no storm, no snow, hail, or rain. Just a calm descent of this flight. And he said that during discussions with other Fed members, they concluded that it's too early to end QT now. There's simply no need for it. And here, some impatient ones. Investors might think, oh, bad news. Because after all, we all want money printing on a massive scale. Right now, as soon as possible, so that crypto finally pumps. But remember, that often ends with a pump and dunk. The market simply reacts quickly and then plummets. And we want the market to strongly revive and gain momentum over the next 6 months, thanks to which this October, so mythical, iconic, even insinuated as the month that will be the peak of this bull market, could indeed be so that the end or middle of the third quarter, according to all data regarding cyclicality, at least for Bitcoin itself, could truly be the peak we are all waiting for. So, hypothetically all the time, despite the fact that everything is shifting a bit. And unfortunately, the first quarter, as it turned out, was a total failure, except for maybe 2 or 3 weeks in January. It's still, besides this widespread disappointment in the cryptocurrency market, especially among new investors, we still have half a year, potentially even a bit more due to the current shift for the market to show its claws, for everything to pick up. And even if we were making 10% month over month on Bitcoin now, look, we have from 85,000, for example, 94,000 in April, then another 10%. We have, for instance, 9,500, which means we are around 103 to 104,000. Then we would have, for example, 111, 120 something, almost 140, right? And all the time, by making 10,000 month after month, we can easily reach around $200,000 within 9 months, which would mean that the fact remains unchanged, that the cryptocurrency market could be valued in October or November of the 25th year. For example, at $6 trillion, which is 6,000 billion, which would mean that we would double the entire market, or some altcoins, which regained dominance from Bitcoin, which then of course sooner or later transferred to them. More or less. Yes, more or less. We'll see at what level it will be, but let's hope it's as high as possible, indeed all the time. Some alts have a chance to do 3 times, 4 times, even 5 times. Some of them, those that are in the top 100, those that are in the top 50, also despite their relatively high market capitalization, so nothing really in the next 6 months suggests that the bull market in cryptocurrencies is going to end, that January was the peak, that $110,000 for Bitcoin was. And these chats in bull markets are not necessarily going to be like that. Many on-chain indicators also suggest that such a situation should not occur, and that all the time within 6 months, we can still make those easy gains, twice on Bitcoin, and also higher values, especially from these current lows on individual altcoins. But returning to the main topic here, which I'm recording about today, yesterday's FOMC was really received very positively by the market. Maybe we didn't have a big pump, but in the end, the American stock market closed in the green, and cryptocurrencies also grew. So, the Fed also provided its predictions regarding the next interest rate cuts, and it looks as follows. So far, nothing has changed in this year's projections. The American Central Bank expects 2 more cuts by the end of 2025. However, it's also important that they plan to continue this cycle of cuts. Interest rates until 2027. So just looking at the truth, we can consider that yesterday's FOMC meeting was a long-term success for us. Mainly, it's about the Federal Reserve calming the market. There's no longer the same uncertainty as before. We've revived a little bit. Everyone's mood has improved, at least to some minimal extent. And I remind you that markets hate uncertainty. Remember what happened before the elections, when it was so close that Kamala Harris might win instead of Trump, where, at least in the short term, it would have had a very negative backlash for the cryptocurrency market, just like it rebounded now after the fact, after profit taking from betting on the event. But the point is that everyone in the cryptocurrency world was in a panic, fearing that someone else might accidentally take the presidency in the White House and simply ruin it. The boom in the crypto market. So back then, when there was uncertainty, when it was unclear who would be president, Bitcoin didn't want to rise at all. These cryptocurrencies didn't want to grow. And when a lot of things become clear, especially in the American market, then it turns out that we have a much greater reason for growth. And suddenly the market doesn't look as ugly anymore. It doesn't look as bad. And you can simply operate on it better or worse. So yes, globally, investors and traders, need to be reassured that things will be fine. That's how it looks in current times. That's just how the market functions. And it so happens that yesterday the Fed, led by Powell, you could say, delivered. They delivered what we were waiting for, because the slowdown of QT and a calm, gradual move towards QE, combined with the assurance that interest rates will continue to be lowered. As I said, there's no euphoria yet, but the market definitely needed this kind of hope. Well, because since the beginning of February, things haven't been rosy, right? We've had 6 to 7 weeks of correction, both in the American stock market and in crypto. Many people were afraid that this could be the end of the bull market, and that we're even starting a recession. Even such opinions were emerging. A bear market in the cryptocurrency market, a recession in the capital markets. But you know my approach. I still believe that we are currently going through a strong correction, I must admit, but it's not yet the beginning. Bear market. Yesterday's FOMC meeting reinforced my belief that we are in a bull market. But we need to be very patient because the Fed has adopted a long-term strategy that will stretch over time. And, ultimately, it should be very bullish for risky assets. I remind you all very eagerly and warmly to subscribe to this channel and give a thumbs up to this video. It motivates me to keep working. The conditions are what they are. Some people have definitely left the cryptocurrency channels, but I congratulate those of you who are persistent and still here. I think the market will reward you, and you won't be disappointed for staying on board. So, subscribe, comment, and like my content. Thank you very much. So let's now move directly to the market analysis. Crypto. I'll also show you a few opinions, experts on the current situation, which I will compile so you don't have to search the internet and verify who is saying interesting things and who isn't. Because in recent months, so much bad has been happening in the market that even popular industry analysts are writing that even Bitcoin is entering a bear market. A lot of such voices are emerging, not only among the proverbial public, but also among more prominent individuals who analyze this market thoroughly. in every direction. And the head of the analytical platform, CryptoQuant, for example, points out that many on-chain indicators show a lack of new liquidity and a huge volume around. 100,000 was not able to attract new investors to push the price higher. So inflows to ETFs have also been negative for several consecutive weeks. He also mentions that he still hopes his data only signals a bearish sentiment, not a full-fledged bear market. He also stated in his tweet that he does not intend to short Bitcoin and is still holding his positions from below, which gives hope. Looking at the table of quarterly returns for Bitcoin and Ethereum, we can easily guess where the negative sentiment among market participants comes from. Because although there are 11 days left until the end of the quarter, so far Bitcoin is experiencing the worst quarter of a year, host having in its history. Ethereum is performing even worse. And if the current price action remains at a similar level until the end of March, it will be the fourth worst quarter in the history of the largest altcoin ever. So, once again, I'll repeat, Bitcoin is experiencing the worst quarter of a year, host having in its history, ever, backwards. And Ethereum is in an even worse situation. So everything is visible on the chart. But, unfortunately, we hit it moderately. And since the beginning of the year, we have stagnation, decreasing interest in trading, and stagnancy. The latest on-chain data from Glassnode confirms that liquidity continues to shrink, and capital inflows into Bitcoin have practically stopped. There is also a recent report from Glassnode, where they observe that the realized capitalization is growing at a rate of only plus 0.67% per month, which is barely over 0.5%. And from this, we can draw two key conclusions. Firstly, currently, there is a lack of new capital that could support even higher prices for this asset. Secondly, expectations regarding volatility are simply heightened because the market is transitioning from a phase dominated by gains back to a more neutral balance. Yes, let's call it that. Just listen to it. So, a similar trend can be observed in the volumes of inflows to exchanges. They are the central place where this trading activity is usually intensified, and we can see in a binary way. Directly, what exactly is happening? Inflows to all exchanges have decreased from 58,000 bitcoins per day at the market peak to the current value of 27,000 bitcoins per day, which represents a decrease of over 54%. And not only that, this indicates significantly less interest and a lower level of speculative activity in the market. Also, take a look at what's happening in the derivatives market. This is extremely important because they generate the largest volume due to leverage among all market segments. And by analyzing open positions in futures contracts, we can observe a significant decline in open interest. In recent months, open positions have decreased from $57 billion at the historical peak to the current $37 billion, which is a 35% drop. This clearly indicates an overall decline in speculative and hedging activity, which aligns with the simply weakened visible activity in the previous on-chain metrics. So, as you can see, the data confirms that there is a general contraction in liquidity. And here is one more observation. I compared the volumes from January to March. And in March, roughly for the trading month, the last until February 20th, spot volumes on exchanges dropped by as much as 62%. So this is yet another, the third metric in this niche, in this segment, indicating how significantly interest has declined over the span of just 6, 8, 9 weeks. Let's take a look at how this situation affects the two most important groups of investors, namely short-term and long-term investors. And here, there is a tendency that these short-term holders are more susceptible to any corrections. And this is also visible in the current charts. They usually can't withstand the selling pressure. They don't have diamond hands. Let's call it that in industry terms, like the long-term holders do. That's a fact, not an opinion. Yes, that's usually how it looks. By analyzing the sum of 30-day losses of these short-term holders, we simply see that a significant portion of new investors once again sold at a loss, leading to the largest period of realization. Losses in this cycle, and these short-term holders sold Bitcoin at a loss totaling over $7 billion, so quite a lot, especially since the Bitcoin market cap at the moment is, more or less here, 1 trillion with a bit extra. Well, not with a bit extra, because it's, 1.7 trillion, but still, with 1.7 billion in losses, that's about 0.5% of the total capitalization, which is quite a lot. And the situation among long-term holders is much better, as their selling pressure is starting to weaken. Moreover, as a cherry on top for you, I'll tell you that there are also subtle, albeit subtle, signs of new accumulation, which is good for Bitcoin in the long term. And the binary spending indicator, which measures the spending of LTH, or those long-term holders, is slowing down and starting to reverse. So, we have a net position change chart for long-term holders, which looks even better, because it shows that over the last month, long-term holders purchased 167,000 new Bitcoins for themselves. So, we see a significant accumulation on their part, and the charts also show that. These long-term holders still possess a relatively large portion of the total network wealth, especially for this stage of the cycle, where historically, more often, previously, they regularly sold off these Bitcoins as the cycle progressed because they knew how these cycles typically unfold, statistically speaking. And that's quite positive news, currently, because people who have held Bitcoin for a long time are not as inclined to sell their tokens. They prefer to trade actively instead. Therefore, a relatively large pool of capital remains in strong hands that firmly hold on to Bitcoin and do not intend to let it go at these prices. It's known that it should be even more expensive this year, so this definitely weakens the supply. So, to summarize a bit, when we look at the reaction of both groups of investors to volatility, we assume two different scenarios. Firstly, the short-term investors, to put it nicely. Here, to put it bluntly, but in simple terms, they incur some of the biggest losses in this cycle. This reflects a certain level of fear, for sure, while the long-term investors have slowed down their selling. Moreover, over the past month, they have been accumulating new tokens, new bitcoins, taking advantage of the low valuations. Therefore, the long-term perspective doesn't seem as dire as some might think. Simply put, this group of long-term investors, who hold a significant number of tokens, might be preparing to accumulate an even larger number of bitcoins. And while the accumulation by long-term holders is indeed a positive aspect of the current period, we cannot rule out further declines in the short term, as short-term investors are realizing losses and are under continued selling pressure. If they decide to continue selling, we can expect the price of Bitcoin to slide to the next key level in this cycle. And this chart right here, I showed it earlier during my recent market updates. Generally, the bearish scenario remains unchanged. It simply presents three main bands based on the cost of purchasing Bitcoin by short-term holders. One support level for the price at $92,000 has already broken. Like a worn-out condom. It gave way very quickly and very strongly. And the same goes for the second one. And here it is. Look, this blue line on the chart. Another very strong support for the price, and the entire upward trend is currently the lower boundary of this model, which is the yellow band. This is at the level of about $71,000. And the probability of forming a temporary bottom in this zone is significant and should be kept in mind. Simply the fact that we can fall to this level. More or less. And the question is, what can we do with this? What can one do with such information? A prudent investor? Well, for instance, not to sell in a panic because something might happen. It doesn't matter. In my opinion, even if we drop a few percent with those three waves on Bitcoin, we know we'll recover those losses in the long term. And we're not investing for a week or two, but for the long haul. It's simply about the fact of having stablecoins ready. I still have a second order on my long position on Bitcoin at the level of $74.5 thousand. It didn't go through. The maximum drop was around 76, about 76.5, and it was short by $2,000. Oh well, the order didn't materialize. Still, my long position is in the green, which I initiated at the level of 79.5, $500 to $700. You can see it on the screen now. That's the entry point. Ethereum is also in the green. There, 1,900 with Classic is the average entry. Now, which I bought at 200 with Classic and 1786 was the second order, which also went through. The long position is also in the green. So, regarding other long positions, which I'll quickly go over with you, take a look. TON is around 0. Bitcoin is also in some profit. Here, Pepe is also in a small profit. It was just a few percent, short of the third order. I think to go through. Unfortunately not, but the second order went through, so PP experienced a significant drop. You can see now why only long positions, twice. That's the first reason, and why I waited so long for these orders to go through. A few people were very worried earlier that it would wipe us out. I don't think that's the case at all, despite the fact that Bitcoin is at a significant loss, and Link is also at a significant loss. These two tokens are about 35% down in these long positions, which I'm also showing you on the screen. I have less in Tone and Litecoin, and overall significantly, as I described to you on Telegram and the channel, than in the long positions on Ethereum and Bitcoin, both of which are already in the positive. So, out of these 7 long positions, I'm already in the positive despite the drop of about 30%, just like you. If you had the perfect parameters I showed, identical, so it's okay at this point. There's a slight rebound, so it's cool, and we're still, of course, waiting after the spot purchases of these altcoins to eventually realize profits, because many of these tokens are still in the negative. So, take a look at this support around the $71,000 level. On Bitcoin itself, it is very, very strong. And if we were to drop there, I would expect a very strong rebound from this zone, possibly even going to $85,000 to $90,000 back in a few days. It is quite possible. So purchases at the 71,000 level. If we hypothetically drop there, which is still in play, I didn't say it won't happen. It's too early. Don't get euphorically excited about what happened with the FOMC. I'm talking about a long-term. Nice success here regarding this pause and further plans, Regarding the lowering of the plane, in the short term, it means that we can't get another nail in the coffin as a final blow. So purchases at this level could give us quite certain profits. That's what I think. In a relatively short term, so it's worth preparing some additional funds here to average out, or to enter Bitcoin for the first time if you are new to the market. So, Similarly, if you adjust stop losses appropriately on the spot, you can confidently secure your capital, right? If some of your positions are in the positive, as I mentioned, you don't have to do the same as I do, because I have that comfort. It doesn't bother me. I just hold on. I know I can. I know I'm capable. I've held tokens for a year, 2, 3, some, to come out ahead earlier. It simply isn't a problem for me. I've gotten used to it. Well, okay, but in this counter, among those advocating for the beginning of a bear market, the start of a downturn, are investors. Certainly, those who base further Bitcoin movements on global liquidity, who are precisely stimulating what will happen. And according to many analyses, in 2025, this improvement in liquidity is expected to occur, among other things, due to the actions of the Federal Reserve, and as an indicative date for pumping money into the markets. Through various financial mechanisms, it is assumed to be around April 30th, which is about 5 to 6 weeks away. I also don't want to focus on what the price will do locally, especially since Jerome Powell just pointed out a long-term and calm approach by the Federal Reserve to improve liquidity in the financial markets. I don't get involved in that too much. I prefer to broaden my perspective here and focus on the horizon instead of reacting intensely to what might happen today or tomorrow. I simply don't rule out local volatility. The crypto market is known for its surprises, but you have to protect yourself mathematically and structurally against what might happen, calculate the possibilities, and determine which direction to take. We want to play this out, but when everyone thinks we're entering an up-only mode, a correction usually comes. We've seen this somewhere before, right? So, we shouldn't get carried away with what's currently happening, even though it's not something mega or incredible, but it's always a nice change, at least temporarily. Yes, a small one. And in my opinion, everyone needs to understand this. Keep it in the back of their mind and approach the topic humbly. Because even though Powell's tone at yesterday's FOMC was really positive, his statements still refer to long-term bullish implications for the market. Yes, I recorded this video around 3 p.m. Polish time. By the way, I'm currently in Cambodia. Behind me is a very beautiful landscape or painting, probably of Angkor Wat, or some of the archaeological sites around here, which are simply present here. I'm super excited, among other things. They filmed Tomb Raider and a few other productions here. Indiana Jones probably wasn't filmed here, but it totally has that vibe. It is the largest religious complex in history, covering 160 hectares. About 1 million people lived in this city at one time, and there are several different uses for it, which were involved during the construction here. Among other things, regarding the alignment with the sun, certain seasons, and other things, so that everything was centrally positioned. Also at the moment, when I go there tomorrow at sunrise, it's the spring equinox, or something like that. Yes, so that the length of day and night is exactly the same. So that should also play a role somehow. That happened quite by accident, but it's a great thing, and I'm really excited about this place. Because I'm just interested in such historical things, especially since it dates back to only 1860. By the way, someone discovered it after hundreds of years of being forgotten, practically in the jungle. You know, such a large complex, so it's really amazing and I can't wait. I'm also recording an update on this, while I still can and before I'm completely exhausted, after this many-hour hike. But getting back to the topic, I'm recording around 3 p.m., and in literally half an hour, Trump will have his 5 minutes during the Digital Asset Summit in New York. He won't be there in person, but he will be appearing virtually. It's worth keeping that in mind. We'll see what he says, because it's another conference that could impact the crypto market. I'll probably summarize something about it on Telegram. It will have premiered several hours after that, probably in the evening around 9 to 10 p.m. So I wanted to let you know that this is happening today. So just note that we received assurance yesterday that the bull market should continue, and the Fed will help with that. In the long term, cryptocurrencies should grow. However, it's events like today's Trump speech that will most locally move the market and cause fluctuations based on the information he provides. If he says anything interesting at all, and if not, there will probably be small declines. So, no one has any idea what the president of the USA will say. It could be something really weak. An announcement. We might have sell the news, but we also can't completely rule out the scenario where Trump, for example, announces that cryptocurrencies will be exempt from capital gains tax, and then there would be a pump, so you have to expect anything. We are unfortunately in a cycle now where the market heavily relies on Trump's actions. All eyes around the world are on him. Despite this, by the end of this year, the direction for crypto has a high chance. Up, I think 80 to 90, especially from the current levels. It's really impossible to predict locally what Trump will come up with, and whether these increases will start in 2 weeks, a week, or in a month and a half, or maybe in 3. And so a little more. To sum up, throughout most of this video, I say that the FOMC meeting was bullish for the market, but you probably also want to see the opinions of other people from outside, some experts. So for example, Josh Mandel, an experienced trader with a background at Salmon Brothers and Cuckstone Associates. He wrote that slowing down QE is in a way very similar to QE, because markets like to play based on future events. And now we've received information that liquidity is expected to slowly improve, so most likely the market will play on that. Just as a side note for you, I'll tell you that Josh Mandel is one of the bigger bulls in the Bitcoin market. And a few days ago, I described his forecasts on my Telegram, so I'm referring you to that post. Artur Hayes shared an equally bullish opinion, writing that Jerome Powell delivered and QE is coming to an end. He actually believes that the nearly $7,000 on Bitcoin was most likely the bottom, But according to him, stocks might fall even lower. But let's also note that Hayes is heavily overinterpreting the Fed's actions here, because QT hasn't ended yet. But I assume he's also considering that the markets will be front-running increasingly better macroeconomic conditions and will be a bit ahead. Indeed, what might potentially happen in the future. But finally, let's take a look at the situation with Ethereum, because after the FOMC, Ether is above $2,000 again. Let's take another look at the MVRV chart. They suggest a good moment for long-term accumulation. According to it, Ether is extremely undervalued, but not necessarily. Exclusively, this indicator tells what will happen with Ethereum and plays a leading role. That's why I remind you that you now have available a report that will appear further. We are meticulously preparing it with the team. Everything will be described. And most of what is in the mentoring, I will also send to you so you can see how it looks to your email inbox. So just enter your email in the newsletter. You have it in the description below this video and a QR code on the screen. Find it yourself. One of the links at the very top. It will appear any moment now. It's unknown when. So simply, if you don't have your email entered there, you won't receive it. But on this indicator, we have just reached the green zone. This historically indicates excellent moments for accumulation. Look at this level carefully because we won't be in this zone forever. I can't directly encourage you to buy any cryptocurrency. I don't even intend to or need to, but do with this information what you want, what you think is best. Of course, you might also say, okay, Merrick, but you bought Ethereum at 300. That's true, but no one expected such black swans. I also bought at 1400. So all in all, I'm at a small profit now in this cycle with Ethereum. It's a bit awkward if you've been accumulating Ethereum for 2 years. It's weak, but that's how it is. More than 2 years, actually. It's March 25th of the year. I started buying at the end of 22, so it's been practically 2.5 years that I've been accumulating Ethereum. That's why it looks average. But I'll add that I plan to do another detailed analysis of Ether, and we'll probably post it on the channel next week. Besides, there will also be a video. So subscribe and leave a thumbs up so you don't miss it. A summary of the most important current events related to what's happening now. We'll see if Ether is already dying or not. There might still be something to it. So that's it for this video. All the links to bonuses and everything I talked about today are in the description, and there will be 1 or 2 more videos, I think, this week if I manage to put them together. If not, then miss me. I'm currently traveling around Asia, and I believe that sometimes you have to, especially when there are downturns. I couldn't find a better moment. I work sometimes 2 hours a day, 3 on the best days, and sometimes I work up to 7, including weekends. Of course, because when I'm traveling, I don't pay attention to whether it's Saturday or Sunday. So it probably ends up being 3/4 of a full-time job. But for me, that's very little. So I'm bursting inside to carry out some projects, to keep going, to push forward. However, market conditions aren't favorable, so sometimes it's better to take a little break, especially since Asia is cheap. Tuk-tuks for $1 and meals for 2, sometimes $3 for lunch. So I'm just laughing here a bit. It's not so bad for me. But it's always nice to pat yourself on the back and spend a little less. So take care. Thanks for watching. Bye for now. See you.